All right, so on the day of the national budget delivered by Finance Minister Enoch Godongwana, what happened to the markets, and is there anything connecting the two? 0.8% in the red for the all-share. I want to bring in Gary Booysen from Rand Swiss. Gary, thanks very much indeed for your time. So generally, when we have these big events like the budget, we track the Rand because it's possibly an indicator of some reaction internationally. I'm wondering whether or not you've seen any evidence from local stocks or the local currency to this budget.
Also, first of all, the market is down largely on the back of international factors. So we have the S&P 500 down around 0.25% at the moment. So we are in a negative, we are having a negative day. So there is negative sentiment throughout the market. But on the back of the budget speech, we actually saw the local currency strengthening. It was about say 10-15 cents from where it was trading. We got as low as 18.12 against the US dollar. So there was certainly a little bit of optimism in the budget. I mean, a lot of commentators saying that they don't see too much in the budget, but the market's certainly reacting positively. On the day, sure. I mean, we had the resource index down, over 4%, but like I said, this is mainly driven by international factors. And I think, while the budget was largely priced into the market, I don't think we saw any major moves. I think for financial markets, mildly optimistic.
Yeah. Look, a couple of trading updates and results. I mean, the one thing that caught my eye is Corp. And I mean, when you look at it, this is essentially because the hospitality section is doing well in the country. And I think that's welcome news if you want to resuscitate the economy, just knowing that you're seeing more people in hotels and experiencing the tourism sector, perhaps. Is that what you're getting out of this Corp update?
Certainly, it was a very strong update. So a couple of updates to this. So while the overall market was negative, Corp finishing the day up over 2%, and as you say, that was really on their 6 months results. Now, just remember, Corp is an international company, so it operates in 35 different countries across 6 continents. So about 34% of its revenue comes from Europe. So it is very international, but they do have obviously Food South Africa as well, which is facing very similar pressures. Now, just the South African segment is now back above pre-COVID levels, just in terms of sales volumes. And you're really seeing, I suppose, the same things that we've been seeing, the likes of the Spur results. People are getting out there, and certainly, now that we are not locked in our houses, we're spending. And I think, maybe this does have a little bit to do with load shedding. You want to take the family out to the restaurants just because you have no power at home. And certainly, we're seeing that in corporate updates. But looking at Corp, I mean, definitely a difficult operating environment, across Europe, across Australasia, another big segment that's about 22% of their business, and that really, it's still facing supply chain disruptions, product shortages, energy prices are increasing, but overall, a really solid result as the world opens up. I suppose the big surprise for me is that there's no indication of a slowdown, and even though we've had rising interest rates, across many developed markets, you're not feeling it in the underlying economies.
Yeah, the other one was Standard Bank. I mean, we look at banks because they're directly connected to the consumer in terms of savings and so forth. It was some incredible figures coming out of Standard Bank. Do you share that sentiment that this was a very strong showing here that Standard Bank gave us in its update today? Because it does speak to the economy in one way or the other, doesn't it?
No, absolutely. So the Standard Bank has been saying to us, they've been kind of hinting that they're seeing the South African economy as a little bit more robust than maybe others. So definitely the Reserve Bank has economic growth at 0.3% for the year. Standard Bank is predicting 1.3%. So a little bit more optimistic in the past, but we're seeing why they're optimistic now by this set of numbers. So it was just a trading update, so not a lot of information, but they estimated the estimated earnings per share by the market was around 1967. The most optimistic estimate was just above for them to earn 20 Rand and 51 cents. The trading statement saying that even on the lower end of their guidance, they're going to make 20 Rand and 63. So this is earnings up 32 to 37%. So it was a regulatory announcement they had to release, but Standard Bank doing incredibly well. This is a stock on a PE of just 10, so that puts it on a PEG ratio of above 3, which is just it's very, very cheap for the bank, and the bank clearly doing very, very well. Now, part of that will be high interest rates. That does assist banks up until the point where it starts to really curtail growth. But yeah, stellar update from Standard Bank, and the stock finishing 3.88% higher, and that dragging the financial index up almost 1%, and really the leader on the day.
Yeah, especially in an environment where the Treasury tells us we 0.9% growth this year, with the Reserve Bank telling us it's 0.3. Well, Gary Booysen from